Happy Wine Wednesday. We're back at it again. And today we're going to talk about taxes.
Property taxes.
Versus income taxes.
Correct.
So property taxes
Are a joke.
Unfortunately, we have to pay them.
It's not always exciting, but you know what? If we want to stay in our home, we need to pay our taxes. Because in the event if you do not pay your taxes and you let them lapse for 3 years, you could go into tax foreclosure.
Yeah, property taxes, every home in the state of Michigan, and there are some states that don't have property taxes, such as Tennessee. I know they don't, but they have a higher sales tax. We also are one of 11 states that have 2 tax periods, a summer and a winter. So yeah, they get us coming and going.
Can you tell us when the summer taxes and the winter taxes are due?
In most counties, and I say this because some counties are a little different. For example, Monroe has a little bit of a different schedule in certain areas. But in Wayne County in particular, is the summer taxes are due July 1st. Sometimes they don't have the bills ready, but they give you at least 30 to 45 days to pay them.
That is true. The bills
That is
aren't
true.
ready.
And then the winter, which is generally the lower tax bill in Wayne County, is due on December 1st. And again, that's when they state they're due. And that's when we have to consider them due, even though sometimes they don't even have the bills out to the customer yet. So
most loans you'll have an escrow account, so your taxes are included in your payment. And this is where the thing gets really hairy, because even though the tax is due December 1st, your mortgage company won't pay them till February, because they have a little grace period and they use that time up. So keep that in mind. If you're actually paying them on your own, you still have a grace period for that tax bill, but they are technically due July 1st or December 1st. But
Correct.
you do have a grace period on those.
so
A question that I often get, or even when the tax bills do come out for a client that has closed, they will actually get a bill in the mail, and it'll be out anytime around July 1st, and it'll say tax bill on it. And the same holds true when it comes December 1st. It'll say tax bill on it, and they kind of panic, but we do try to remind them, obviously, that is the tax bill. It's just notifying you that the taxes are out. Keep an eye on your mortgage statement if you have escrow set up, and that money will be in your escrow account to pay those taxes.
correct. And when you are closing at a certain period of time, for example, if you're closing in June, when you are buying from a seller, the seller pays the taxes from July 1st of whatever year, say we're 2025 was last year, they pay till July 1st of 2026. Because you're closing before, you might have to pay them back what we call prorations of taxes that were already prepaid on that home, which technically goes back to the seller because they're not living in the home, you're living in the home. So keep that in mind. If you have a lender that doesn't disclose proration of taxes, that might be a little bit more you have to bring to closing that you're not aware of. Here at Ruoff, we do disclose proration of taxes. We have a calculator that tells us what you will owe to the seller so that you're aware of your real cost at closing.
One other thing that Ruoff offers, and our loan trio definitely makes certain that when we get the property taxes, we can also project what the potential future taxes are going to increase to once you file your homestead. So that's always great information to have at your fingertips, only because you don't want any surprises once you close on the home, file your homestead, and then they reassess the property at that higher price point, at your purchase price that you just closed on, and then they reassess those taxes, and then you get increase in taxes. So we do notify you guys of that up front.
So we're going to just reiterate that sentence, because people don't understand that once you buy a home, your taxes become uncapped. That means the city that you're going to move to will reassess your property. It'll be reassessed at a higher value of which the current taxes are at, and your taxes will be increasing.
Which then will increase your monthly mortgage payment. So if you have an escrow account. So we are all experts pretty much at our field, and we know when this is going to happen. Talked to a girl yesterday, tried to give her an update because the taxes were extremely low on this home. Looked at the deed transfers. It hasn't been sold in over 35 years. her taxes will 100% go up.
Probably
Therefore, her payment will go up. So I let her know that right away so that she needs to be comfortable with the payment it's going to be, not with the payment that we're going to set it up at. So,
Well, and another thing I did clarify last week, we can qualify them and utilize the future taxes at the time of closing. But what that means is you're going to end up bringing more money to closing. So those are all things that we have to discuss during your loan process and setting up escrow if you have to do that, which I think we do a really good job at doing that. So.
yeah. And we like to do it in person, face to face. So, again, I've said it before, if you can't meet with your loan officer and sit down face to face, you maybe get missing information like this that is crucial to your process and your mortgage payment.
So again, if you have 20% equity in the home, you don't need to have an escrow account. And I always tell my people, if you have the 20% equity, don't take the escrow account, just pay your taxes.
But then you're going to be like my mom and wish she wins the lottery so that she can pay her taxes. So remember that if you don't have an escrow account, you need to make sure you have a little bit of...
You have to have the money set up.
Yeah.
You have to be
Correct.
good at saving money. So that you
Don't
can pay
ever
your
gamble with money when it comes to paying your property taxes or your house payment.
My mom used to do that.
Property
all the time.
taxes, IRS, it's all
Not good, yeah.
right.
Yeah.
Pay your
You'll
house
never
payment
win.
on time. Every house payment is due at the first of every month.
Yeah, if
You
you're
get-
late on anything else, be late on that. Don't be late on your mortgage payment.
Correct.
Right.
That hurts your credit the most.
And more importantly, even speaking of, I know we're talking about escrow, but as far as actual house payments, you do have that grace period till the 15th. And then after the 15th, you're assessed a late payment, but it doesn't technically hit the credit report until after 30 days.
After 30 days. Mm-hmm.
So that's what we have for you today.
So let's wrap up our Wine Wednesday. Cheers, ladies.
Here's to the rest of the week.
Enjoy.